Business lunch on CNBC-TV18. I'm Sonia Shenoy, and with me is Pavitra Parekh. Well, it's really good pullback that you're seeing in the market right now. Almost a 200-point gain on the Nifty. And here's what, the Sensex is now back almost at 60,500. After the deep sell-off that we saw on Friday, the market is making a big recovery. But perhaps this pullback is something that you shouldn't put too much stock into, considering that it's just one day. And most global markets are shut later today on account of Christmas, the long weekend. US, UK, Hong Kong, Singapore are all shut. Hence, you won't get a definitive trend. The better thing perhaps would be to wait and watch, as a lot of our technical experts have indicated. But for now, the rally is looking pretty good, especially led by the banks.
Oh, absolutely. So a lot of the smaller banks are doing very well. So actually, let's pull a few of those up and you can see the kind of move that's come through in, say, South Indian Bank, in Karnataka Bank. These are just a few of the names, but pretty much this entire space is doing well. The PSU Bank index in itself is up over 4%. So you can imagine the kind of moves that you're seeing under the surface there. The metals pack also doing very well. So, you know, do keep those on your radar. The likes of Tata Steel, Hindalco, these are some of the top gainers on the Nifty. You also have the auto pack faring well. And the only point, in this market which is not holding up so well is the pharma space, but that of course did see a rally last week, so do keep that in mind. That's what's going on with the market action. We will come back to this, but first up, let's get you the latest in the ICICI Bank Videocon loan case. After taking former ICICI Bank CEO Chanda Kochhar and her husband Deepak Kochhar into custody, the CBI has now arrested Videocon group promoter Venugopal Dhoot. Santya is here with more on this. Santya.
After arresting Chanda Kochhar and Deepak Kochhar, CBI made its third arrest in the case and arrested Venugopal Dhoot of the Videocon group of companies today morning. Venugopal Dhoot was summoned by the CBI to appear before the agency's Mumbai office, and once he appeared, he was arrested by the agency. He will be produced in the court today. Now, talking about what has happened so far, it was on Friday evening that both the Kochhars, Chanda Kochhar and Deepak Kochhar, were arrested by the CBI and produced in the court. CBI got their custody for 3 days. Today morning, Venugopal Dhoot was also arrested. Now, in this exclusive information, public prosecutor representing the investigating agency just now appraised the court that in the last hearing, Defence Counsel raised this issue and said that the CBI is not arresting Venugopal Dhoot, who, according to the Defence Counsel, is the main accused in the case. So, public prosecutor appraised the court today that the agency has now arrested Venugopal Dhoot. At that time, that was on Saturday, public prosecutor told the court that the reasons Venugopal Dhoot was not arrested because he was cooperating with the agency. But now the situation has changed and Venugopal Dhoot is arrested by the agency.
All right. Thanks a lot, Santya, for giving us an update on that situation as far as the CBI arrest, third arrest over there. And Chanda Kochhar, as we know, has already been remanded to CBI custody. But let's get our focus back on the markets now. Private equity firm Advent is set to acquire a stake in Suven Pharma and has also made an open offer for an additional 26% stake in the company. Ekta is here to tell us more. We had a chance to chat up with the management as well. Ekta, over to you.
Thanks for that. Well, yes, the big news is that Advent has entered into a share purchase agreement and they will be acquiring 50.1% stake in Suven Pharma for around 495 rupees per share, which turns out to be a deal size of around 6,300 odd crores. Now, the mode of payment for this particular acquisition is going to be cash. Now, the promoter group will continue to hold around 9.9% stake in the company after the deal. Advent will also launch an open offer. If it goes through entirely, they will hold 76% stake in the company. Reason for the stake sale is because the company has indicated they were unable to bring a proper succession plan in place. Venkat Justi's role post the deal, they're likely to stay on for a period of time. Suven Life, remember that's the R&D arm of Suven. They have no plans to fund Suven Life as of now, which is basically from the Suven Pharma funds. Suven Life, in fact, raised around 400 crores from the rights issue, and hence the company is well funded for 2 years. That's what Mr. Venkat Justi has indicated. Now, Advent's plans post the acquisition, they intend to explore a merger of its portfolio company Cohance Life with Suven. Aim will be to build basically a leading end-to-end CDMO as well as merchant API player. They will focus on servicing the pharma as well as the specialty chemical markets. Now, we did speak to Advent. A couple of key points is that Cohance's first half FY23 revenue is tracking similarly to what FY22 was, or around 1,300 odd crores, 28% margins. Combined margins would be around 30 odd %, and as of now, they're not considering delisting at this point.
All right, Ekta, thanks a lot for getting us all of the details on this story. But moving on, let's also bring you some important opinion. Earlier today, we caught up with the management of Suven Pharma and also of Advent International to learn more about the transaction and also a possible merger with Suven with Cohance. So let's listen into that as well.
Eventually, the Advent has to get the controlling stake. That's what after the 26% open offer they will launch. That's what the intent is all about. So the maximum will be diluting is around 50%. We've been telling that we are looking for a strategic partnership, but this thing is a combination of strategic partnership along with the financial partnership. The value creation has to be more, and the commitment and the things what we do in terms of the commitment to customers and the passion with which we do the things and the focus of the business will remain as same. We are not able to bring in the succession in plan. So there is so much time, maybe 5, 6, 7 years only, I can be actively doing this thing. So we need to plan properly. And also at the same time, we need to increase the value to ourselves and to the shareholders. And this is an opportunity where this is strategic financial investment has come. That is the reason why we have taken this opportunity, because with the it will be EPS accretive and it will double the revenue when the platforms merge into Suven and Suven continue to run this way.
So the first half is tracking exactly the numbers that you've spoken about, which is 1,300 crores revenue, give or take about 28% margin and close to 30% ROCE for the business. So I would say the combined financials, Suven isn't public, and I don't want to speak for consolidated financials. But by and large, I would say equal-sized companies in terms of revenue. Suven, as we know, is 1,300 crores revenue, 44% margin, and Cohance is 1,300 crores revenue and about 28% margin, right? Consolidation often has some net pluses and minuses, so I don't want to speak of audited numbers. But if I look at broad headline numbers, this is the way the numbers for both companies are.
Okay, well, let's move on from pharma to the housing space. Let's listen into K.K. Mistry, the Vice Chairman and CEO of HDFC. He spoke on the performance of the real estate sector in 2022. He also said the structural demand for housing remains very strong. He expects a growth of almost 15 to 20% in individual loans, and HDFC has gained market share in the last couple of quarters by growing faster than the industry. Let's listen into what he had to say.
Now, the structural demand for housing in India will always remain strong. I mean, it's not a 1 year, 3 year, 5 year, 10-year view. It's a very, very long-term view for various reasons. One is very underpenetrated market. Mortgages in India are just about 11% of GDP, which is amongst the lowest in the world. Affordability has improved a lot over time because prices have not moved up in line with the way incomes have moved up. So all in all, the outlook for the sector remains bright. The government also has been very focused on the sector by providing fiscal incentives and a variety of other things, the credit-linked subsidy scheme and so on and so forth, all of which has benefited the sector. So I would expect the growth momentum to remain strong in the years ahead. If you look at the individual loan segment, our growth has typically been between 15 and 18 or 15 to 19%. Last quarter was higher. Normal guidance is between 3.3 to 3.5. So we feel confident that spreads would remain in that band of 3.3 to 3.5%. I'm not talking of spreads, I'm talking of net interest margin. So net interest margin should remain between 3.3 and 3.5. And spreads, I think the 2.25, 2.27, 2.28, I mean, let's not get into 1 or 2 basis points here and there. 2.5 to 2.8 is typically the level of spreads we've had for a long time.
All right, that is K.K. Mistry saying that housing demand is solid as ever, and this is likely to move into the next year as well, that is into 2023. But with that, let's actually talk about the banking space now. Credit card spends in the month of November declined by over 12%. This is on a month-over-month basis. The growth in issuances has come down to 1.63%. This is for the month of November from the 2.14 that we saw in October of 2022. So Abhishek is here to bring us that entire picture. Abhishek.
Well, the credit card spends, as you mentioned, has grown by about 1.6% month on month. This compares to about 2.1% in the previous month that you saw a growth rate. However, spends have declined by more than 11% on a month-on-month basis, with average spends declining by about 12.5% on a month-on-month basis. The top four have been losing a market share, which is clearly seen over the last few months as well, given the fact that, others have gained market share over there. So you are seeing SDFC Bank overall spends remaining strong. However, for others, the likes of SBI, ICICI, etc., they have been losing the market share. Market share on a YY basis, if you see the spends per card with over 50% gain is seen for the likes of Canara Bank, South Indian Bank, Bank of India, SBI Card, as well as Karur Vysya Bank. However, market share loss in spends is seen on a YY basis, the highest for SBM Bank India, followed by IDFC First Bank, which has lost about 33%, in terms of per card spends, and Standard Chartered, City Union Bank, ICICI Bank, and Kotak Bank, etc. So the view is that while card issuance remains strong, given the fact that it continues to grow on a month-on-month basis, the decline in spends is massive on a month-on-month basis. Remember that even in November 2021, after Diwali, you saw a sharp decline over there. So after Diwali spends, that is in October, that you saw the month of November saw a sharp decline, and hence a similar trend is seen in this year as well. The COVID-led impact needs to be seen whether that will have an impact in spends in December as well as January. While inflation has come down, the cautious stance on spends is a worrisome factor. The top four continue to lose market share both in terms of number of cards as well as spends. Back to you.
Okay, thanks a lot, Abhishek, for that. Let's slip into a quick break. Then up next, India ramps up its anti-COVID measures as cases rise in China. More on that story.
You're still tuned into Business Lunch on CNBC-TV18. It is a 190-point gain that we are seeing on the index right now. So just around that 18,000 mark, and it has been a good day for our markets as well. But let's get you the latest updates on the COVID situation across China. There have been a record number of infections seen as COVID spreads to the hinterland. So despite the record number of cases, what is positive is that China has reported no COVID deaths for 5 days till Saturday. Now, reports say that the Chinese city of Zhenjiang is reporting at least 1 million cases every day. The local officials are predicting that the number will double and finally moderate later in January. Meanwhile, authorities are scrambling in order to try and add more medical equipment to address the already strained resources in hospitals and clinics. So, Sonia, that's really the situation across China right now.
Okay, it's looking quite grim over there. Meanwhile, in India, a 40-year-old man from Agra has now tested positive after returning from China. The man has been isolated and samples will be sent for genome sequencing. In light of rising concerns, the centre has also ramped up the anti-COVID measures. RT-PCR tests are now compulsory for passengers arriving from China, Japan, South Korea, Singapore and Thailand. And the centre has also asked states to conduct drills tomorrow, that's the 27th of December, to ensure readiness of health facilities and availability of oxygen in case of a rise in COVID cases.
Okay, some more news on this front. In order to also make sure that insurers remain prepared for a possible wave of infections, sources are telling us that the insurance regulator, that is the IRDAI, has reached out to life and general insurers and asked them to keep hospital networks on standby. The regulators also asked life insurers to review their capital situation, and insurers have also been asked to promote vaccinations via advertisements. So, more important news coming in on the COVID situation and the preparedness for it.
Okay, so government is very proactive to try and control or curtail whatever outbreak comes through. But moving on, the government has merged the Pradhan Mantri Garib Kalyan Yojana that was started in 2020 during COVID with the National Food Security Act. So after this move, food grains will be made available free of cost to more than 800 million beneficiaries till December of 2023 under the National Food Security Act. Sapna is here with all the details. Sapna, over to you.
After 28 months since the scheme first started, the cabinet has finally decided to allow PMGKY to sunset. Instead, the government will provide free food grains under the PDS from Jan 1. Even the highly subsidized rates of 3 rupees per kilo for rice and 2 rupees per kilo for wheat under PDS will be waived. Government estimates a total food subsidy at 2 lakh crore for 1 full year from Jan to December in 2023. Essentially, the quantum of food grains available for the poor will now come down. Till December 31, grains under the Food Security Act and the Garib Kalyan Ann Yojana will be available. Both put together, this is a massive average of 50 kilo of rice and wheat per month per family. But from Jan 1, only the normal PDS allocation of an average 30 kilos per family per month will be available, free of cost. The closure of PMGKY will be a significant fiscal positive for the government. Sources tell CNBC-TV18 the additional annual cost to the government for distributing food grains free of charge under the NFSA is likely to be only around 20 to 20,000 crores, hardly 0.1% of the GDP. Importantly, this additional cost is already factored in the 2 lakh crore estimate for calendar 2023. In comparison, the additional cost of PMGKY this fiscal is estimated at 1.20 lakh crore, over 1% of the GDP. 60,000 crores of this additional liability has been provided in the supplementary demands for grants, while the balance 60,000 crores is likely to come through in the revised estimates of the budget on Feb 1. Just how costly PMGKY has proved is evident from the galloping food subsidy. Before COVID hit India, the food subsidy was penciled at 1.15 lakh crore for FY21. Post-COVID and PMGKY, it rose by a massive 148% in FY22, and this fiscal will touch a record high of 3.20 lakh crore only on account of PMGKY extensions. We can thus conclude, with the COVID-led deaths and economic hardship receding, the government did not want the fist to hemorrhage any further, and so it carved out a safe passage by allowing food grains completely free under the time-tested PDS, while allowing the Garib Kalyan Ann Yojana to sunset.
All right, Sapna, thanks a lot for bringing us the details on this important story. We're going to get into another short break here, but you don't go anywhere. There's lots more news and updates that we're tracking.
Watching Business Lunch on CNBC-TV18. Well, this year has seen pharma companies, barring a few such as Sun Pharma and Cipla, underperform the frontline indices. While the pharma Nifty index has fallen 9%, the Nifty has risen a little less than that number. So what have been the highs and lows this year for the pharma sector and what lies ahead? Ekta joins in to decipher the year gone by and what we can expect in 2023. Take a look.
2022 saw opportunities from COVID-19 dwindling. Case in points with the likes of Serum stopping manufacturing of its AstraZeneca vaccine, Zydus and Dr. Reddy's COVID-19 vaccine sales not taking off, Wockhart's UK sales falling as supplies to the UK government dipped, and lastly, Divi's Labs seeing dwindling intermediate supply opportunities for Merck's COVID-19 drug Molnupiravir. For the US, an important development was a clutch of Indian companies such as Natco, Dr. Reddy's, Cipla, launching the generic version of the blockbuster cancer drug Revlimid generic. Challenges included fierce price pressure in the US, continuing with the likes of Lupin exiting certain drugs and Aurobindo delaying its injectable sales guidance of $650 to $700 million to FY25. It was also a patchy year for US FTA inspections, with problems continuing for the likes of Sun's Halol facility, Cipla's Goa plant, Glenmark's Baddi plant. Price pressure, delayed launches in the US, supply challenges along with inflation weighed on most companies' margins in FY23. Gland and Divi saw margins sharply fall year-on-year in first half. Aurobindo reported margins at multi-quarter lows of 13.7% in Q2. And while Lupin saw a recovery in margins in Q2, it disappointed with margins hitting lows of 7% at one point. 2022 was a year of acquisitions in India as companies scouted for growth. We saw companies either buying one or a portfolio of brands such as Dr. Reddy's and JP Chemicals, buying cardio drugs from Novartis, or Mankind scooping up Panacea's domestic brands. Not in the domestic market, but this year was also marked with the $3 billion buyout of the global company Viatris's biosimilar business by Biocon. So what is the way forward in 2023? The ability to withstand price pressure in the US, which would be fueled by key drug launches in the US such as Lupin's inhaler drug Spiriva generic, Cipla's cancer drug Abrixon, or Biocon's biosimilar insulin aspart and bevacizumab, and continued sales for Sun Pharma's specialty business. 2023 will also be marked by companies undertaking remediation to solve their outstanding US FTA issues and taking steps to fuel growth in other markets such as India and even China. As always, let's leave you with the valuations of companies on an FY24 basis, what they started 2022 with, and where they are ending the year with.
All right, Ekta, thanks a lot for recapping that entire year for us as far as the pharma space goes. But on that note now, we're going to wind down on this edition of Business Lunch. Thank you very much for tuning in. And stay with us because Mid Cap Radar comes up next.